Tunnel. My name is Vlad Karpel. I'm CEO and founder of both companies, and today we're going to have a live trading room open to trade stock and options using our technology. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Also want to welcome new subscribers. Disclosures are very important. Please read them. Trading stock and options involve risk, not suitable for everyone. You must be aware of the risk and be willing to accept it in order to invest in current market conditions. I'm not a financial. Good morning, Noel Mark. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. And you can see the relationship between Tradespoon, Yellow Tunnel, and Avant-Garde here. All right, trading psychology is important. Again, there's always uncertainty in the market. Employment data came in better than expected. Market is pulling back. Why? Right? Probability of rate hike now is going up, right? Almost 90% probability that by end of the year we're going to have a rate hike, not rate cut. Where, months ago we were talking about rate cuts. So things change quickly, right? Ultimately, it's very important to have a trading plan. The goal should be disciplined trader, mechanical trader, where you're always risking the same amount of money. You always have the same amount of cash, and it's a rinse and repeat type of approach. That requires documentation. What you cannot measure, you cannot achieve, right? So the idea is to measure, right? And have some kind of a feedback loop that you can review your notes from your journal, you can review your grades for every trade that you make, and then adjust your performance. Toolbox opening while you did not update the most stock. Give me an example, Bill. I'll look at. I'm not sure what you're talking about for most stock this morning. Opening value is like open price. That could be. It's a quote prior. I was more concerned about predictions. All right, let's look at what the market is predicting, right? Positive, negative visualization is important. The dichotomy of control basically says just before the market starts, right, in the next 4 minutes, review your trading plan, look at how much cash you have, look at how many positions you have and position size. And the goal is, especially if you knew 4 positions, and not to risk more than 2.5%, right? We could reach the top of the market now, and you need the cash. And if the market does pull back more than just these couple days fluctuation, then you want to make sure that you're not down more than 10%. And if your position is down more than 2.5%, doesn't matter if you think that the rally is going to continue or not. I propose to be disciplined and just cut your losses. So let's look at stock forecast toolbox. Bill said the date was not updated. Let's see. I checked. Usually, if it's not updated, let's see. Spiders closed at 757. 757. Open predicted price. This is predicted low and high. 753 to 759. Open 757.09. So that looks right, and that's at the end of the list. Yeah, give me an example. But my understanding that usually if it doesn't work, like not updated, you would see no predictions, right? Or stale prediction, right? Microsoft today is June 5th. If you see June 4th here or June 3rd, then it means we're not up, then we might be missing data points. But as long as we are at 428.05, 428.05, that looks good to me. So just give you an example. Maybe I can look at it further. But anyway, spiders, market predicted. Microsoft sees it. Looks like the uptrend, still an uptrend. Spiders, it sees losing momentum, right? 760, 750 losing momentum. Model is basically turning neutral, right? In the next 6 months, right? We had new data points for the months of June basically said, model said, we're not going to go too far than 756. I mean, we could obviously reach 800 by end of July, but it does make sense that there should be some type of digestion period, right? That the market needs to adjust. Hydrated Muffin, welcome back. So we did have unemployed. So now that most of the major companies and AI companies announced earnings, and this is more of a software companies, small cap, mid cap announcing earnings, everybody's turning their attention to interest rates, right, and employment data. So employment data came in better than expected, right? April numbers got revised. I was doing my push-ups and listening to Bloomberg, employment came in better than expected. Good news is bad news, right, for the market. We've had that times before, which, I mean, as long as there is some kind of rational explanation. I mean, no new signal. Employment data, everybody was concerned this year. Most of the economists were concerned that, AI is going to take over all the jobs. There was going to be massive layoffs, and unemployment rate is going to skyrocket, and we see the opposite reaction. But oil prices are still high, right? I mean, they pulled back in the past couple of days, right? So those contrary signals, actually crude oil below 50-day moving average, and Brent crude is, at a 100-day moving average. So we're off the highs, but as we said, the clock is ticking, right? Economy will contract, global economies will contract if the Brent crude oil and gasoline futures are going to stay at these historically high elevated levels. So that's the current reaction to the market, right? Market just open. You see big sharp sell-off in emerging market, right? This is where the a lot of the AI names, right? And semiconductors, right? So people are taking profits, right? They need to have an excuse to take profits. Semiconductors, emerging market are pulling back. Small caps are pulling back. Spiders pulling back. But value stocks are outperforming, right? Dow Jones yesterday did another all-time high, right? Actually making a new marginal high. So you can see basically rotation going into summer. People are, getting into more defensive positions, right? Taking some profits from Microns and Dells of the world and start buying, Citigroup and Caterpillar, right? Citigroup finally breaking out, and Caterpillar is breaking out, and railroads, CSFs, high. So it makes sense, right? This is not a panic. This is just a rotation. We've had this rotation back and forth. Bill, AEVA. Did you mean tablet or AEVA? I don't know what AEVA is, but let's see. AEVA. Maybe you meant tablet. Or maybe AEVA. Okay. June 5th. No, so we have the data. I mean, open print. I mean, the data is delayed. 2531, it said. 2531, what's the EVA? 2531. Yeah, AVA, I'm not sure. It's a very, EVA 22. Not sure, but these are the quotes. Maybe something was the quote provider. That I would have to check. That is weird. But in terms of predictions, we are, and then 2531 to 2741. 2531. So we closed at 24. Yes, this does not look right. I agree with you. The EVA does not look right. June 4th. I would have to check. Okay, AEVA. Yeah, open price not today. Okay, AEVA. Thank you. If you find other symbols, Bill, send it to me. I'll look at it. These are not the signals, not the stocks that I follow, but it's worth checking. Okay, QQQ is down. Equal weighted S&P slightly down, 30 basis point. VIX still under 16, so no panic in the market. Dollar is, still not range bound from not for kind of upper part range, but no new signal. 10-year yield again above that 450. Every time we're above 450, people get anxious about the rate hikes and inflation data, right? I think CPI data next week, if I'm not mistaken. Yeah. So now people are going to think about CPI, and if it comes in again harder than expected, probably it will, because oil prices are still elevated. People are concerned. Okay. Any questions? So yield is up. Crude oil is actually, down. So that's good news, right? That at least the situation in the Middle East has not changed. Nvidia pulled back. SPX is still above 7,500, right? So we're still above 20-day moving average. We're above this key support level. Most of the positioning, 70. We talked about yesterday 7,500, and I would say flip point is around 7,320, right? 7,300. So as long as we are above 7,300, I think bulls will step in, right? If we drop below 7,300, then that could be an issue. Not issue, is just then you could have a probably pull back to 50-day moving average, right? 7,200. And we've already seen like Google's of the world, right? They did pull back to the 50-day moving average, right? Google pulled back to 50-day moving average. Amazon. So there are a lot of trillion-dollar companies that are, pulled back to the 50-day moving average, and they're kind of staying there. And people are rightfully so. They just probably need an excuse to take some profits, in the names like Marvell, right, or Cisco. DRAM, right, is down 7%. AMD is down 4%. LA Lilly making new highs. Qualcomm pulled back, Micron pulled back. So all the favorite names that the model didn't identify in the uptrend, today they're pulling back. Makes sense. Morgan Stanley pulled back, Silver pulled back, sensitive to interest rates. Emerging market pulled back. And that's about it. Any questions? All right, then let's look at the position. Now we're in June officially. So is it raining? Oh, it's raining now. Okay. Trader log. Let's look at. So Broadcom. I needed a rebound. That's probably not happening. Yep. Okay, so that was Broadcom again didn't meet the expectations. It's a $2 trillion company. If you don't provide very strong guidance, then the stock is down. So that trade is gonna be $2.50 minus the premium, so $2 loss. That was the earnings play, so that hasn't changed. Amazon, I did add to Amazon position yesterday with the idea that Amazon is oversold. that Amazon is oversold, and 50-day moving average, 70% of the time you do have a bounce back. So I did add to my Amazon position with the idea that it's oversold and the 50-day moving average will hold. Right now, the next, the support level is at the 250 strike. I assume there's a lot of positioning at 250 strike. If I go to June expiration, 250 strike, 20,000 open interest, 20,000 contracts, and then you have 24,000 contracts at 265. So that's your range, 250 to 265. If 250 breaks, then it potentially could drop to 240. But 250 and the put volume is also the highest at the 250 and then 260. So 250 you have had a lot of position, and then 240. So Amazon 250, right? 250 you have high concentration of calls and puts. Are we keeping Transocean and IGV? That is a good question. Okay, so we're keeping Amazon. I'm keeping Amazon at least. I'm keeping Amazon. Broadcom. Well, that trade I need to forget about, right? It's fully lost. I mean, I can argue that maybe people are overreacting to the Broadcom, and if there is a high concentration of puts in June, right? Highest concentration is at 7,000 in terms of highest open interest in June. You can argue that potentially that 400 will hold, right? That 400 will hold. It's a 50-day moving average. People are overreacting, right? And then we will have a bounce. And if we're not, then I have a well-defined stop loss, right? If it drops 380, 390, then I would be out of the position. But if it, bounces back, it doesn't have to be at all-time high, but maybe, here, then, take that contrarian approach. That, this reaction is overdone. So that would be one thought process. I mean, usually you want to wait till it stops selling off, right? So maybe next week, check back with Broadcom and see if you want to buy it. We talked about emerging markets. So I did trim emerging markets. I'm inclined to, once we're not making new lows, maybe start thinking about buying back those shares that I closed. So I trimmed emerging market. Halliburton. Not this Halliburton. I mean, it's stable. I did trim my position. If it drops to 38 again, and there's no change in the situation in the Middle East, I'm inclined to buy again. The question was on Transocean. Transocean is not going anywhere. I do have till, I still have 2 more weeks. That level hasn't been breached. It's a 100-day moving average. It's been underperforming, right? We got Schlumberger symbol, Halliburton. Transocean is kind of not bouncing back. So for now, I'm keeping. It's a small position, so I'm keeping both Schlumberger and Halliburton. Transocean and Halliburton. IGV 100 was a large strike. We're right at the 200-day moving average. This is let's see how much down am I. So, but the problem with IGV that these are option positions. So unless we have a rebound next week, this would be a losing trade, right? Because I have a spread that expires next week, the only spread that I have next week. So June, I'm down more than 50%. June, I'm down more than 50%, June 12th. So that's next week. I'm going to close it now. I am down more than 50%. Wait for Monday. I mean, right now it's kind of, marginal new low. I do see a lot of positioning at IGV at the 50 strike. Sorry, 90 strike. So if I go into June and I look at the 100 put, this is where it's one of the highest concentration of puts and calls, right? But again, it could be pinned to that strike, or it could escape, right? And then it will accelerate the move probably toward the 90 level. Next week, 100 strike, doesn't really have any volume or open interest. Next week, it doesn't matter. But these June 100, so if you look at Microsoft or even IGV, I don't think the momentum has changed. Let's look at the IGV. Actually, did not check. It's still an uptrend. It still shows that there was enough breakout for sustainable period that it makes sense that IGVs of the world, Microsoft of the world, are made a breakout, and this is just consolidation before the next move up. But when is this next move up? If you have stock, you can wait. If you have option that expires next week, you might have to make a decision. Active trader did pick up. So if you look at the aggressive power trader, right, on yellow tunnel, it did pick up Cisco. I like Cisco, right? We talked about Cisco since end of the last year, that this is going to be one of the better stocks this year, and it's kind of been performing. I think this is temporary pullback, and I still think it's going to be a shallow pullback. Is it 2%? Is it 5%? That I do not know, right? Usually I'm start thinking about buying, but because I trimmed my QQQ position, I trimmed my I got out of AMD spread. I don't have a lot of tech, a lot less, so I'm inclined to kind of wait on. If Monday we don't have continuation to the pullback, then I would buy, right? But aggressive power trader did pick up Cisco. That's been a signal for a few days. I think Cisco is in strong uptrend, and it makes sense to buy, right? But that doesn't mean it cannot drop to 116 or 120. So, one day doesn't set the trend, but this DRAM, we do have these sharp pullbacks in these emerging market companies, right? And they are, usually you have these sharp pullbacks. Any questions? So I would be buying and pullback. When is the pullback over? It could, could spill into the next week, right? Interest rates are rising, right? And that's uncertainty. And when is the next? I think it's June 15. When is? June 16, June 17. Right, and you have a new Fed chair. So that is the uncertainty in the market, like what he's gonna say, how is he gonna measure inflation, how's he gonna trim the balance sheet, right? How is he gonna lower the interest rates? Nobody knows, right? And market doesn't like uncertainty, so this uncertainty could persist to June 16 and June 17. So for now, I would be patient and just wait. All right, let's keep going. So emerging market, wait till pullback stops and then just try to buy back these shares, right, that I sold. At 74, right? I sold at 74.10. I can buy it back at 66. So that's good. What else? Let's keep going. We talked about emerging market, Halliburton. We talked about IGV. I mean, Microsoft IGV. Microsoft, I can wait, right? If I think this breakout is confirmed and it's going to continue going higher with a stock position, I can wait. Software, I don't have luxury of waiting with options, so we'll see. QQQ, I trimmed significantly. If it does drop to closer to 700, I would be a buyer. 700, maybe 710. Right now we're still, we're just at the 20-day moving average. But if the 720 doesn't hold, most likely we're going to go to 700, and that's probably where I would consider adding. I do have large cash positions because of I trim emerging market and QQQ. So I'm checking cash. I do have ample amount of cash, more than usual, because 30% is in cash, 10 to 20% are dedicated to these options trades, and then 50% I have it in QQQ and emerging market. And I trimmed QQQ multiple times. I trimmed emerging market, so I actually want to get into QQQ and emerging market, but I want to see some kind of signs of stabilization first. So that's my QQQ take. Microsoft options. So I do have Transocean and I have IGV. So not a lot of option positions, which is good, right? You don't want to be overly exposed, right? Because if all your positions options, all your positions was calls, and you don't have any cash, and uncertainty can persist till June 16, 17. It could persist till next earnings season that starts in July. Well, then the options, especially if all your positions in June, then you can lose more than 10% of your portfolio. You can lose more than 20% of your portfolio, and that you want to avoid, right? That nobody wants to recover from. It's very hard to recover psychologically and physically from when your account is down 30%, right, 40%, right? You want to avoid that. But that's been a common mistake, especially from people who, when you start trading, right? Because you have few good trades, right, on Micron, on Dell, on Marvell. You think you kind of solve this puzzle of stock market, and then all of a sudden you have few weeks of pullbacks, and then your account is down 40%. Right? So that you want to avoid. You want to always journal that, and kind of always think about, on one hand, fear of missing out, that the AI is going to take over the world, and we're going to have all these trillion-dollar companies. But on the other hand, fear of future regret, right? We get pulled in two directions. So this is where one is, all right, this is fear of missing out. And that's what's driving the market right now, right? I mean, maybe Broadcom should not be a $2.5 trillion company, right? But you do have fear of missing out that AI is here. It's incredible. Like, I start coding again and using AI, and I don't have to write a single line of code, right? I just tell Claude, this is what the functionality should be. This is what the system design should be. This is what the architecture should be, and I don't have to write a single line of code. So that means that the company going to be a lot of efficiencies, right? We used to have a live chat, now we have chatbot, right? The company is going to be a lot more profitable, right? So that's what drives my decisions, and like fear of missing out, right? I just need to buy QQQ right now. And then on the other hand, I realized that Watch can come in and he wants to reduce the balance sheet. Employment is stable. We have all these job creations, and inflation is unstable, right? CPI and PPI continue to increase. So he might say, listen, we need to start raising rates, right? Inflation is out of control. Employment is stable. Balance sheet is also out of the control. So let's do some quantitative tightening. And then, I'm reading 1929 book, and I'm like, nothing has changed in the world. So this is the fear of future regret, right? Fear of future regret. So we all experience that with, kind of, stuck in the middle, right? We're stuck in the middle. That's me. I don't know if it's a good depiction of me, but so usually my solution is you want to be, if we make new highs in QQQ, you want to make sure that you have some QQQ exposure, right? Still, right? And so you feel fine if we make new all-time highs. And that's, everybody has that reference point is different, right? Based on your background, how much money you're managing. And then if we do drop to 50-day moving average, you want to have ample amount of cash to say, okay, you know, AI is here, I'm buying QQQ, I can wait, right? I can wait. If it's not July, it's going to be October. And then, you know, you want to be in that position, right? If you're down 30, if we reach here and you're down 30, 40%, you're not going to experience fear of missing out, right? You're going to be very disappointed. And, you know, usually you always sell at the bottom, right? When you don't have enough cash. So that is something you still want to avoid, if possible. All right. And like you lost weight. I do look like I lost weight. Thank you. That's fine. I am watching Bitcoin, right? We talked about Bitcoin, that even though it's not highly correlated to the stock market is at all high, but Bitcoin is dropping, right, precipitously, and it's taking out the lows, right, 60,000. Next level is 50,000. So it looks like, again, it's a warning that potentially market could also pull back more, right? In February, it started pulling back in January, right? And then equity market followed. So I think Bitcoin is the most sensitive to this, you know, risk-off mindset, or at least of retail investors. Yeah. Healthcare in general has been the discrepancy, you know, the divergence between the healthcare and the QQQ, you know, I've read some articles, is at historical high. We've never been in a situation where there's so much money in the technology and AI and so little money in healthcare. And you can see this trade is reversing. People are buying healthcare and they are selling technology, right? So that is not a bad way to hedge your portfolio, right? If UNH you think is going to break out, you know, and you have a lot of exposure, right? Then maybe it makes sense to go long on UNH. Especially if this trade is going to be prolonged, right? If next week the trade is going to get reversed, I don't know what the next week announcement is. I'm not sure what the news are. Then, you know, probably healthcare will pull back and people are going to pile into Micron again and AMD. But for now, you know, I mean, one day doesn't set the trend. Bitcoin has been selling off precipitously for many days, right? QQQ, this is only, you know, day two. If we, you know, I mean, again, 700, I would say, is kind of right now the line in the sand. On SPX, we didn't even breach 7,500, right? Yeah, we're still at 7,500. So for now, you know, bulls are still in control. Bulls are still in control. It's too early to. But, you know, for diversification purposes, if all of your exposure is in Dell, Micron, and AMD, and, you know, then, yeah, I would buy, you know, maybe Citigroup, you know, on pullback. I mean, definitely like stocks like Morgan Stanley, you know, on pullback, maybe Caterpillar, or just value stocks in general. VTV continues to make new all-time highs. So that would be my plan. Any questions? Any other questions? All good questions. Thank you, Ted. Thank you, Fred, Tahir, Bill. Keep it in the same. Questions. Let's see. Okay. Forecast toolbox like Best Buy. What happened? Well, retail stocks are doing well, right? It did pull. I mean, it had strong earnings. It's pulling back again. Higher interest rates, wages are not growing, right? So and expectation that Fed is going to raise interest rates. So whether it's a Best Buy or XRT in general, price pattern is the same. I mean, it had a strong rally. We had few companies like Kohl's, right, had a strong earnings, right? You reach strong earnings in Kohl's. I think Macy's had a decent reaction to the earnings, right? So consumers are still spending money. Mostly it's on credit cards, so their balances are going up, right? Their debt is going up. But now the main driver is the yield, right? Right, and the yield continues to go higher. Any other questions? All right, then let's look at other positions. So DRAM is down 10% today, kind of falling off the cliff. Marvell is down 10%. So all the AI names are down, right? AMD is down 7%. Google is down. Eli Lilly, so healthcare stock, Eli Lilly, that was a good signal from last week or this week. So that's breaking out. So Eli Lilly, maybe not in UNH, Fred, maybe Eli Lilly. If you have a larger account, and then Texas Instruments. So all the big names are taking a break, right? QQQ pulling back. It's only value stocks, and still down 60 basis points, but doing better than the spiders. That's down to 748. Any questions? Micron not good. I mean, it's not that it's not good. It's just it's so far away from the 50-day moving average that it's hard to say where the bottom is, right? I mean, it could stop at 800, but it could stop at 600, right? It just depends how long this pullback. If it's going to last till June 16, 17, until we have at least some kind of a glimpse into the new Fed chair, right? What Walsh will think about it. And then he can come out and say, listen, CPI and PPI is out of the control. Situation in Iran is not changing. We don't want to get into a recession. So we're raising rate cuts. We're going to raise rates, right? Then, Micron is going to be at 600. So at this point, it's hard to say, is it good or is it not good? This is the time to look at these rules, right? And make sure you don't break them, right? So 4 positions, 2.5%. If your Micron is down 2.5%, I would be out. If you're up in Micron, I would reduce the Micron exposure. I mean, I would not reduce. I mean, I'm not selling my QQQ. I did close AMD, so I don't have any. I closed AMD, so AMD was, I guess got lucky, right? Because I'm out of AMD. I had Micron position. I'm out of Micron. So the only thing that I do have Amazon that's already pulled back. So I think it's stable. And then I have IGV and half of the Microsoft position. So now I have more concentration in software. And again, stock, I have time to wait and I trim. This doesn't look good, right? So this one position, I would just follow the rules, right? I guess Monday, if we're still down, I would just close it. If there's no bounce back by Monday close, I would get out of this position. But the software doesn't look right. It looks like it's pulling back more. All right, a few announcements. So next week I'm traveling, and Keith is traveling. So there will be no closing bell next week. So if you're going to closing bell next week, nobody will be there. Morning bell, I might be a little bit late, but I'll try to at least show up for 15, 30 minutes to give, just review of my positions. So you guys have it. But just keep in mind that we're traveling next week, and, I will try to be there at 8:30 Chicago time and just do a brief session. And you can see Amazon is not falling off the cliff. Google is more or less stable at 50-day moving average. It's your AI names, right? DRAM, AMD, and Microsoft is also, down 1%. So Halliburton pulled back. So energy is down today, even though crude oil is up. But Marvell, Cisco. If you see, I would look at overall portfolio, right? If your portfolio, right, if QQQ is down, let's say, or spiders, I would look at the spiders, right? Spiders is down 1%. If your portfolio is down 1%, I think you're fine, right? I don't think we're going to have a 10% pullback. If spiders is down 1% and your portfolio down, let's say 2%, right? Then that means that you're heavily exposed to AI theme, right? Whatever the positions you have, most likely you have too many positions that you have to AI, I would trim. If your portfolio is down 1%, I would wait for it to stabilize and then I would add. And if your portfolio is up right now, right, because you were either bearish or in a lot of the value stocks, I would start thinking about adding, right? Because SPX is at 7,500. It could drop to 7,400. It could drop to 7,300. I would start thinking about, okay, maybe I buy a little bit at 7,500. Maybe I buy a little bit 74 and 73. So a lot of it depends on your portfolio. My portfolio is not down 1%, right? It's down, but not 1%. How much is my portfolio? I have a large cash position. So my portfolio is down 70 basis points. Okay, so I'm down 70 basis points. That means I have a large cash position, and I don't have a lot of AI names right now. Most of them is software. So, I'm going to wait. You're down 1.4%. I think you're fine, right? I can't tell you you're fine or not. Again, I can't give you an advice, but me personally, I'm down 70 basis points, so I'm fine. In my 401k, money that I need, to send my kids to school and pay for their weddings, if I'm down 1.25%, I trim, right? Then I would say, I don't sell everything, but, start trimming. If I have, like emerging market, I did trim my position in 401k, right? So I trimmed in my retirement account, I trimmed EEM. It drops more, I trim a little bit more. And then once I find stabilization, I buy it back. But you do it in small increments, right? You don't want to sell all of it because Monday it could be at 68 or 70. So you want to be in a position where if EM at 70, I'm happy because I still have EM position, but start thinking about trimming on the way down because this is not a good price pattern, right? We could be in this consolidation phase for a long time. So if I'm down 1.5%, in aggressive portfolio, that's okay. But in 401k or retirement, at least personally, even though I have a full-time job and I still have other income, I think that's, I don't have that tolerance, right? Because market could be down 20% or 15%. That means I'm going to be down 30%. Well, that's not good, at least for me, right? So it just depends what portfolio you're managing and what your risk tolerance level is. But Bill, I think, if all of your money is down 1.4%, I would trim, right? If this is just 20% of your portfolio or money is down 1.4, but the rest of your money is sitting in the cash, I think you're fine, right? This is actually excellent. You should start thinking about, okay, how can I take that 80% in cash and start thinking about buying? I'm managing my, father-in-law's money. I love these pullbacks because he has a lot of cash, more than this right now. I think, 60% of his portfolio is in cash. So every time market drops, I'm like a kid in the store, right? Okay, I'm just waiting for it to stabilize and I'm going to start buying, right? If he was 80% in the stock market and only 20% in cash, I would be panicking, right? Because he's my father-in-law. This is his livelihood. This is how he pays his bills. Then I start panicking. So then, that just depends, right? It depends on the situation. All right, 9:10. You guys are awesome. We will have a closing bell. I would be concerned if the yield is above 4. We're making new highs in yield. Right now, there's no new signal, right? One day we're up, one way we're down. It's just different data points. So for now, most important is keep an eye on the yield. Keep an eye on SPX. 1% pullback, 2% pullback. There's nothing wrong with that, right? Even if we drop to 7, we could drop to 50-day moving average, right? That is normal. It happens, multiple times a year, 5 times a year. We haven't been at 50-day moving average for quite some time. So, and we've already seen Bitcoin dropping, and we've seen Amazon at 50-day moving average, and Google at 50-day moving average. So that means maybe the rest of the market is going to drop to 50-day moving average. And, so that's how I would look at that, right? So if QQQ drops to 50-day moving average, it's down 2%, and you're down 3%, just keep in mind, another 5% drop will take you to these levels. So if QQQ drops 5 and then your portfolio drops another 10%, how would you feel? Would you be greedy and buying, or would you be panicking? So a lot of it is just kind of this future rehearsal exercise. I always ask myself, what if QQQ drops to 680? I would feel great because I have cash, and I think I believe in AI. I don't think we're in bear market, so this is great, right? All right, guys, I'm gonna start preparing to travel. Keep in mind, June is always kind of liquidity dries up, right? People are going on vacation, like Vlad and Keith, and volume goes down. You have these more pronounced moves, right? So you might have day where you're down 2%, the next day you're up 3%. So that could be the situation. All right, that's all I have for today. You guys are awesome. Thank you for support, and I will see you Monday morning. I will be there at Monday morning. Thank you.